Yo, what it do, YouTube? It's your boy MB, ready to break down the best play of the entire week for the S&P 500 on the futures market. So I have 5 goals when it comes to making these videos. Number 1 is to show you plays that I actually took, or at least called out. Number 2 is to show you plays that happen during market hours. Number 3 is to show you plays that are really obvious to take, so whether you're a beginner trader, full-time day trader, or a swing trader, they're very obvious and they don't require you to sit at the charts all day. Number 4 is to show you setups that have defined risk, and so you're getting it at the most optimal spot. So if the trade starts working against you, you know that you're immediately wrong and you can cut your losses. And then number 5 is to show you setups that are going to offer at least 20 points. All right, so now let me get into the best play of the week. So this setup came on Friday, April 12th, and this pattern has been repeating itself pretty much all week. It starts on the 1-minute time frame, but it's easy to spot on a 5-minute. And I first noticed this pattern on Tuesday. So I actually called this play out, and I could have used Tuesday or Friday as the best play of the week. But the reason I didn't choose Tuesday was because there was this demand zone. And so I was only targeting 30 points, whereas Friday offered a 40-point return. So this pattern is called the Wyckoff distribution pattern. There's 2 versions of it. You have schematic number 1 and schematic number 2. They're very similar, but essentially with number 1, you have a new high that gets posted above here, whereas number 2, you don't have that high. All right, so I zoomed into a 1-minute chart so it's a little bit easier to see. But here's our signal. You have this big move up that traps a bunch of buyers, and then we have this giant move to the downside. So even if you enter it here at 70, you can have a 5-point stop loss and you would never get stopped out. But what I've noticed that happens is that after we drop, we ended up coming back up to this area to retest. So I feel like this is the best entry you could get in at 70, 71. I forgot where I entered on Tuesday, but I ended up catching a little bit of this move to the downside. So now going back to Friday, the move was a little bit tricky because you had the signal on Thursday. So overnight, we ended up holding this level of support, and then we ended up breaking that. And so there was this demand zone right here that I felt like could have acted as resistance. Same thing with Tuesday. But we ended up breaking through that in the pre-market session. So now this area has been eliminated. So now I knew that the market dump was activated. So if I add this line here to show you the support level, we bounced on it a few times, but then whenever we broke it, we ended up retesting it briefly before dropping. And so that was the pattern that ended up playing out pre-market. If I draw another line here on this support level, you can see that we retested it here around 7 in the morning, and then that ended up breaking. So I took a short right here at 735 off of this support level that I ended up retesting. But one of my goals was to show you plays that happened during the session. So here we have another support level. So if I mark this level out, we ended up retesting it right here at 845. And you can see that we touched it perfectly. We went a little bit above it. So if you enter here at 17.75, 17.5, or even just 17, even with the 3-point stop loss, you would have never gotten stopped out. I like to use a 5-point stop loss. And since I trade the ES mini contracts, it would be a $250 risk. So now that we enter in here at 17, we got to find our target. And so the next logical point would be this demand zone right here where we found buyers the last time we dropped. You can see after this news event, we had a very sharp move to the downside where we found some buyers. And then the next time, whenever we approach this area, same thing, we got bought up. And then even right here. So at the very top of this range was 82. So initially we get a bounce off of this demand zone, but we still have to retest the support level. So you can see that the next time that we actually retested this area, we rejected it and we kept going down lower. So if you targeted the bottom of this demand zone at 73, we'll call it 77, you could have had your 40-point move. And you could have even taken it a step further because you can see that we're in this obvious downtrend. So if I mark this level out right here, we have this clear channel that we're not breaking out of. So you could have held to the bottom of this channel, and that was down at 53. So if you got in at 17, it was over a 60-point move. So I know that there's people that are able to hold for this long, but I wouldn't have targeted past this demand level. So I'm only going to call it a 40-point move. So that was pretty much it. It was a great way to end the week. I hope you took this setup, and if not, I hope you learned something. I hope you don't miss it the next time it pops up. But I'll catch you on Monday. I love you.